Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. World on fire. Good God. We can't look at this, guys. Like, my strategy is you buy it and you hope that you get excited. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is Wednesday. We have had a week, man. Let's go to the charts because there's no better way to say it. Look at the 10-year treasury. Just absolutely obliterated yesterday. And now in the overnight session, after a small pullback, I mean, the funny thing is that any other day, this was like a big move, right? Well, I mean, this was like an average size move, right? But in the context of this, okay, and lower. Wow. Wow. Meanwhile, equity markets actually handling the higher rates pretty well. Actually handling the higher rates pretty well. And the S&P 500 looks pretty decent overnight. Oil, on the other hand, well, we got OPEC today, so today is a pivotal day for oil, but oil continues to be down, well, at 96 right now. Lower end of the range, but bouncing, so I guess that's good for them, right? Natural gas still kind of on the downturn here. They've got silver and gold. Silver and gold getting absolutely hammered by those higher rates yesterday. And copper kind of sideways. We like copper to go up just because it's a proxy for global growth. Copper going up, that generally means good for global growth, but we're now sideways. Oh dear. There we go. Like, I'm missing a chart. Where'd my chart go? I'm gonna refresh that chart. It's a little broken. Okay. And over here, we got to check out Bitcoin and the dollar here. Bitcoin rising overnight. And the dollar actually getting stronger yesterday, believe it or not. I mean, probably because of the higher rates, right? But kind of middling overnight today. So back here. Actually, no, the close up. Wait, well, let's start. And now we don't need that. The close up. Look, yesterday was possibly one of, well, not possibly. I shouldn't say possibly the, okay. It was one of the greatest days of my trading career. And guess what? It continues because I am still long micro treasury yield futures. Thank you. Thank you. Some music. How are you guys doing? Leaf floating on a lake? That is a hilarious name, dude. How do you come up with that stuff? I love it. How are you this morning? What should we call the stream this morning? Good to see you this morning. Well, thank you. I mean, obviously, because I've got a really big runner, I am in a really good mood, right? Probably too good of a mood. You hike a lot, and you're always near. Really? That's an interesting. Okay. I want to sit down and say I caught the big one, but I don't know. Let's put Bond Massacre continues. Bond Massacre continues. That's what I'm gonna. I don't want to be too much like, oh, you know. So. Obviously, you can see it there. It's not like a huge sum of money or anything, but it's just in like terms of trading. I pulled that off so well. Legendary trade in my mind. I think that the next one I can think of that is maybe close to this was when I went short. So when I went short the treasuries after the May 2018, I think it was May 2018 Federal Reserve meeting, they really didn't like what the Fed came out with, and I made like $500 in a 5 seconds or something off of an order flow signal. That's still my favorite, I think. Just because huge offer comes out and I'm like, oh well, you sell that one. British. Any idea why we keep going higher? What, in the S&P 500? Well, I have to assume you're talking about the S&P 500 because the treasuries are selling and the other things are kind of, well, questionable. The S&P 500, I wouldn't necessarily say it's going higher though. Like, here's the thing. So let's come back to our volume profile chart, right? Okay. Technically we're down on the week, right? But really we've just kind of gone sideways, haven't we? So I think that what may be going on here is that perhaps traders are realizing that the data was not that bad. I continue to see, like, listen, you can't listen to Zero Hedge. This is the real problem. So I go and I read. I really like Zero Hedge. Like, you've got to read. Seriously, Zero Hedge is quite possibly the best data source for retail day traders. But you can't believe what they're saying, because they're going to be like, oh, everything's awful and this is all going to collapse any day. They're always pessimistic, right? That's their lifeblood. So you can't believe them. And there's been a lot of economic, what do we call it? Pessimism. There you go. There's been a lot of economic pessimism over the last month. And every time that a data comes out, it's like, oh, this is so terrible and everything. But when you really look at things, where the economy is at least today, is pretty good, right? This would be a normal economy in any other circumstances. This is just the kind of the trajectory of it is down because, frankly, we were in a bubble. So I think that what we're getting right now is just kind of an acknowledgement from the markets that so at least for now, things are not that terrible. They could be bad, so we need to be on the lookout for things on the downside. There are definitely risks, okay? This could definitely fall apart, but at the moment we're not quite there yet. And that rates have been able to rise considerably. I mean, the thing is that rates are still at 2.7, okay? And frankly, in my opinion, they should probably be at 3%, okay? But given the rise that we've had in rates, that the equity markets haven't like sold off hard is really, really encouraging, right? So I think that there has to be out there some degree of acknowledgement in the markets that the data over the last month hasn't been terrible. So for me, most relevant thing on the calendar now is the non-farms. So I'm not sure you want to hold this into non-farms, right? Do we have any information that suggests that non-farms is going to be really good or really bad? Well, let's come in here. Let's see what they are. Non-farm employment change. They are predicting 250K versus a previous reading of 372. Okay. So that would be a continued downward projection, but over the last 3 months, they have beat the projection every time, right? So I don't know how you sort that all out or what's going to happen. I'll probably have more information on Friday about what we want to do with that. But do you see what I mean? It's like it's going down, but it doesn't look terrible at the moment. That could shift really quickly, but I don't know. It kind of seems like that the equity markets are just kind of digesting things. Now, today, for news, we have ISM Services PMI. That's going to be interesting because the services got hammered last time, didn't they? Oh, no. I'm wrong. I keep being wrong about my memory on the data. Last time, the services beat by quite a bit. So I guess we'll have to see. Anyways, long story. Too long, didn't read. Well, markets aren't really going up. Equities aren't really going up. They're really just going sideways. So. That song should be longer. I wonder if they intentionally just make shorter songs so that they have more songs. Man, look at them come back to those lows so easily. Can you believe that? So here's the thing. I don't have them listed on my calendar, but we do apparently have some more Fed speakers today. So I don't know what time they're going to be at or anything like that, but here, let me see if I've got, what was it Newsquawk was saying? Newsquawk.com/blog. And Fed speeches from Feds Barkin, Harker, and Kashkari today. But I do not have them listed. Don't know when they're going to happen. So that puts us at the next major data point. Of course, the equities are open, and then the services PMIs. Is that a new low? No, not quite. Local low is down at 25. Oh no, wait, that was a new low. My chart is slow over here. Let's see here. Oh, I see. Let's reconnect NinjaTrader here. That should help a little bit. NinjaTrader still says that I have something open on the 10-year here, and I don't know what it is. Maybe it's his volume profile? Be patient, Seth. Let it load. Let it load. Hmm. There we go. Now it's showing. Okay. I just need to be a little patient. Okay. Trading floor, man, are you guys listening to me? Trading floor audio. Today's Fed speakers at 12 p.m. Okay, 7:30 Eastern time. We have Bullard. Okay, Bullard has been like one of the most hawkish guys, right? 10:30 Eastern time, Harker. 11:15 Daly. 11:45 Barkin, and 2:30. Okay, wait. Bullard was 7:30 a.m. So that is already passed then, right? So the next one would be Harker at 10:30 Eastern time. What's this? Treasury looks to be warming to its own buyback operation for off the runs. Fed off the runs. Okay, Fed will love this as it adds another liquidity source without having to do its own quantitative easing aside from the existing blunt SRF. Next, the committee turned to a presentation on the desirability of regular buyback operations as a debt management tool. The presenting member noted that the committee had previously identified several potential benefits of a regular buyback operation, such as smoothing bill issuance, dampening fluctuations in cash balances, and reducing maturity peaks in outstanding debt. An examination of the potential impact of such operations on liquidity conditions in the secondary market concluded that conducting buybacks in off-the-run securities while issuing liquid on-the-run securities could allow Treasury to enhance liquidity and lower long-term financing costs. The presenting member then stated that the growth of the Treasury market and regulatory developments in recent years have reduced dealers' intermediation capacity, resulting in more strained liquidity conditions, and suggested that the potential liquidity benefit of regular buyback operations may have now increased. I see. Well, liquidity in the Treasury market is definitely kind of sucks. And I do wonder if the reason why you don't see a whole lot of contracts out there is because these market makers don't want to provide liquidity without having actual physical bonds backing them up, you know? Breaking. Bowers loses to Trump-backed challenger in Arizona. Well, shall we go? I totally forgot about that there was some key elections. Okay, let's read from Politico. 5 key takeaways from the primary night. Okay, Democrats can see glimmers of a new midterm life after the stunning defeat of anti-abortion measure in Kansas. Eric Greitens is the big loser in Missouri, which means the Republican Party as a whole won. And in Michigan, Representative Peter Maher has conceded in a primary fueled by his vote to impeach former President Donald Trump. I heard about that one already. Votes are still being counted in some of the most important races, but as the multi-state primary made its return on Tuesday after a summer hiatus, the shape of the general election landscape fell more clearly into view. Okay. It would have been a victory for Democrats and abortion rights activists if they'd even kept it close in Kansas instead, as the heavily Republican state rejected an anti-abortion constitutional amendment. Really? It marked a political earthquake with the potential to reshape the entire midterm. Well, I don't know about if it reshapes the entire midterm campaign. Here's the thing. I do think that populations, or should we say voters rather, I do think that voters might be cautious about certain abortion provisions. So I don't know what the specifics of the deal in Kansas was, but you know, I could see them rejecting a constitutional amendment, right? If it was something that was like a vote on late-term abortion, that might win, okay? But the issue I see with this analysis that they have here is that that doesn't necessarily translate to a benefit for the candidates. And there was a poll the other day that suggests why am I having a hard time talking here? I'm not completely locked in yet. There was a poll the other day where they asked people if they were, you know, they were really happy with the court decision, the Supreme Court decision, or if they were concerned about what it might do for women's rights. And the people that liked the decision were like 70% likely or 70% highly engaged to vote versus only 50% for the people that were concerned about women's rights. So the issue is, as it appears right now, is that there are voters, there is a substantial body of voters that are pro-choice, let's say, but they are a little fed up with their party, and they may not be as likely to vote for them. So if that might not carry over to the candidates themselves, but the way that Politico was saying this, so let's read forward here a little bit. In the first test of abortion politics since the Supreme Court overturned Roe v. Wade, turnout soared in Kansas despite a heat advisory and little else to draw Democrats to the polls. Yet in a state where Trump beat President Biden by nearly 15 percentage points in 2020, the amendment was failing badly in a brushback to Republican legislators who were preparing to move legislation restricting abortion. And if the politics of Roe proved fraught for Republicans in Kansas, it's going to be even more treacherous for the GOP in swingier, more moderate swaths of the country. I think it should indicate both in Kansas and nationally that people can be energized around the notion that the Republicans are determined to have government mandates about women healthcare decisions, and that is something that doesn't sit well with a lot of people, says former Kansas Governor Kathleen Sebelius, who served as a Health and Human Services Secretary in the Obama administration. Polls are about as reliable as technical analysis. Kind of depends. You've never been invited for a poll? Well, so let me tell you something, Sharp and Goose. That's the first problem with a lot of the polls that we have. Is so if you go and you volunteer for a local candidate's campaign, right? Go and find your local senator. Actually, it's better to do it for an upstart guy, right? Like maybe you've had a really popular congressman, but they're retiring, and now their party is like a shoo-in. Like here in Utah, it's like, you know, when Orrin Hatch retired, you knew that the Republican was going to win, whatever. In that case, it was Mitt Romney. But anyways, you know, you especially if you get involved in a primary campaign, that just because that's the funnest way to do it. But I digress. It doesn't really matter. The point is you start volunteering for like these campaigns, and all of a sudden you get on all of the politically engaged mailing lists and stuff, and you will end up on a polling list. You will end up on a polling list, and I get so many polling calls. It's crazy. So if you want to get polled, start getting more involved in the politics in the but that kind of suggests, doesn't it? Kind of suggests that there is some sampling bias in the polls that we have. Because the issue is, back in the day when it was landlines, they had a pretty solid list that like covered everybody for the landline, right? But they don't have that for cell phones. And what I think happened with Donald Trump in 2016 and whatnot was that the polls didn't pick up those voters. Those voters that were really engaged to vote for him were people that are not typically engaged in politics and so forth, and so they were much less likely to get called. And then the ones that were getting called were like lying. I think that was another factor. So yeah, polls are about as reliable as technical analysis. I think that if you are trying, it kind of depends on the prediction that you're making. It's a small cliche rather than a representative sample of the population. It can be. So I think that the problem that we've had with polling lately is not that polling is inaccurate and worthless, but rather that experts are trying to make predictions based on polls that are far beyond what the polls actually say. I think what the reality of it. Like Nate Silver's system that he's got, it actually is pretty accurate. And it is the case that in most of the time you can predict pretty closely what the balance of power is going to be in the House, for instance. So I think it's a pretty sure bet that Republicans will be the majority in the House after the midterms. It's a pretty sure bet. A lot would have to change in the political landscape for that to change, for instance, right? But here you can kind of see this thing right here. Well, there are people trying to make predictions that Roe v. Wade will be a huge boon to Democrats. And I don't think that the polling actually shows that. I think that the polling is much more nuanced on that particular point, right? Because as I was just pointing out, the pro-life people are actually seem to be more motivated by the issue and more likely to vote, whereas the pro-choice people at the moment seem unlikely to vote because they're very fed up with their party. They feel like that even if they do go out and vote for the Democrats, that the Democrats aren't going to protect the things that they care about. Yeah. But here, this result that we've had here today, if I'm reading Politico correctly, and Politico really is pointing out something that's real, because sometimes media outlets just kind of pick up on a narrative for the point of the story, and it's not actually what ends up being happening. It does sound to me like Democrats are going to like double down on abortion for the midterms, which could be interesting. Whatever Roe can do to help Dems, Brandon has done many times more damage to them. Well, we should wait. Now is not really the best time to make predictions, because we just had a couple of key events happen, and we haven't actually seen the fallout from them. So we might in 2 to 4 weeks time have a little bit better of a picture, right, about where we're going to go. But I do see a couple of things going on that could be damaging to the Biden administration in the long run. But I'm also kind of seeing like, I don't know, a lot of it has to do with the economy, right? Like if it's very, very obvious that we're in a recession, and possibly a very deep recession by midterms, then yeah, Democrats are going to get absolutely slaughtered. Because the way that the public is going to see it is everything was just fine under Donald Trump, and then you put a Democrat in for just not even 2 years, and they just destroyed everything. That's the way that the public's going to see it. Of course, that's probably not completely fair to Joe Biden. I mean, he made a lot of mistakes, but we were probably always going to see some economic weakness, right? Anyways, let's keep reading here, right? In a bleak midterm election landscape for Democrats, Roe almost certainly won't be enough to keep Republicans from winning the House, and the result in Kansas isn't a perfect indicator of how voters will treat abortion in the candidate races. There you go. So they've already pointed out the things. Okay, so those are the things I pointed out. The question voters were deciding: there was a state constitutional amendment that would have cleared the path for state legislators to ban abortion, not a candidate race where multiple issues and personalities are at play. Still, the outcome in Kansas was the first real evidence supporting a near universal consensus among Democratic and Republican political operatives alike that Roe will likely help Democrats at the margins in November, energizing base Democrats and improving the party's standing with independents and suburban women. That I think that is probably likely true. I think that it is a positive for them, but it's not enough to really move the needle. The challenge for Democrats will now be to attach their candidates to abortion rights and to hammer Republicans on the issue in the fall, while Republicans will labor to keep the focus on rising prices and talk about anything other than Roe. I don't think that this is what's going to happen, but the best strategy for Republicans on this issue is to shift the discussion from abortion to late-term abortion, right? Because what this really is about is like the Mississippi law. This is the thing that I think is so crazy about all this stuff, right? The Mississippi law was a ban after 15 weeks. Okay. So I don't know what's going on that you want to abort after 15 weeks, okay? But it shouldn't be happening. Shouldn't be happening, at least not for an optional. I mean, if the woman's health is in danger or anything like that, then that's a different thing, of course. But man, like it's a very minority. Do you know it's like the Mississippi law that was at question in the Supreme Court case, that would only apply to like 15% of abortions or something like that. Like the vast majority of abortions happen before 15 weeks, right? Yeah, why can't we just have balance? Banning abortion as extreme as is allowing abortion 5 minutes before birth. Yeah, well, like the thing is that I think that what most people have in their minds for abortion is you do the pregnancy test, you find out that you have a child, and then you go in the next weekend to get an abortion, right? And at that point, you know, it's very, very early on, okay? But after 15 weeks, I say, like, what are you doing, man? You've had like a whole almost 3 months to think about it, right? It shouldn't happen after the first trimester. So if Republicans shift the narrative into talking about late-term abortions, then I think that they stand a better chance. But I can already see the problem. Where the Republicans that are really engaged on this issue, that's not what they're going for. They're just going for a complete outright ban. They're not doing the Mississippi law, right? So that's not going to work in their favor if they do it that way. Republicans dodged 2 bullets on Tuesday in Missouri. Eric Greitens, the disgraced former governor, finished far behind his Senate primary bid, and in Michigan, Tudor Dixon emerged from a gubernatorial primary full of more hardline contenders many Republicans feared would be a drag on the party in November. That's good news for the GOP, and it's a departure from where the party appeared to be heading in many of its early primaries, picking candidates who seem dangerously prone to getting in the way of the good political environment for Republicans. Yes, it is a thing, unfortunately. In Pennsylvania, physician Mehmet Oz, the Republican nominee for Senate, has been polling so poorly, Republicans are discussing alternative paths to the Senate majority. Republicans all but conceded the gubernatorial race in the heavily Democratic Maryland after nominating Dan Cox, the Trump-endorsed Senate lawmaker who organized buses to Washington for the rally preceding the riot at the Capitol on January 6th. I don't know a whole lot about Mehmet Oz. I can't remember what the controversy was around him to say if like that's really justified, but if he's polling poorly. Interesting how they framed that Dixon was endorsed by Trump, who would be considered a drag on the party. Yeah. Well, it is a thing. I have to say, I really hate the way that Republican establishment deals with this stuff. I know this isn't like a political stream, but I am a Republican, so I kind of have some insight into this sort of stuff. And what I see both sides of it. On one hand, there seems to be these candidates that want to come out and be the top candidate, and they just have all of the wrong takes. And when I say all of the wrong takes, I mean all of the wrong takes that the general population doesn't like. Okay, like if you're a politician, really what you want to do is you want to amplify your strengths, the positions you hold that are popular with the population, and you want to minimize the positions you have that the general population doesn't like. I mean, that's just what you do if you want to get elected, right? But there seems to be this group of people in the Republican Party that like want to lose. It's like, yes, this, I know that this is unpopular, but I need to do it. And you know, the Republicans, they believe that stuff and they vote for it, and you end up with a candidate that's not likely to win. And I totally get this thing where like you don't want Republicans in name only. We've elected a lot of Republicans that don't really do the Republican things, right? And so it's almost like not our party sometimes. Yeah, that's true. But I would rather have those than to just not have Republicans in office. I'd rather them be a Republican in office. You're going to get more done with a Republican in office than not, because you just doesn't work if you just lose, right? It's far easier to fundraise when you're not in power. Oh, I don't know about that, man. It is when you're incumbent, man. Fundraising is the fundraising issue is an interesting one, because just about any candidate, if you're one of the two major candidates, you can get the funding that you need, right? But it does seem that the money has too much power. I think the solution for that, though, is it has to do with like the base process. Like, one of the things that I've noticed is that our current election system it just favors people with media reach way too much. I think that we tend to select better leaders when people are like able to actually talk to the candidate and like interrogate them, right? So like in Utah, we had the caucus system, and you would be like, you state rep, whoever your state rep was, or like I would become a delegate, and then the two candidates to be in the primary for state legislature, they would come over to my house and we'd have dinner, and I get to ask them all the questions that I want. And so when I came time to vote, there was no doubt in my mind who it should be, right? But when you come to election day, a lot of the people that are voting don't know a thing about the candidates. And that's a problem, right? Democracy does not work if the population is not educated on the candidates and the issues, right? And I think that that's really more the problem, and why the money ends up dominating everything. I digress. It's possible the early results on Tuesday will turn out to be a blip. In Arizona, Mark Finchem, an election denier running for Secretary of State with Trump's endorsement, was running ahead. And overall, this year's primaries, said Jason Rowe, the former executive director of the state Republican Party in Michigan, I think a lot of cases we have nominated our weakest general election candidates, so the primaries have not served us well. But for the traditionalist wing of the Republican Party, the early indications on Tuesday were mostly positive. An exception, Kari Lake, the Trump-endorsed candidate for governor, who still insists falsely, of course, Politico will insert that falsely, that Trump won the 2020 election, pulled ahead of Karen Taylor Robson, the establishment-backed candidate, as vote counting continued through Wednesday morning. But in a House district in the state, Ron Watkins, a celebrity in the QAnon conspiracy world, was barely even registering. Good, because the QAnon people are insane. And then there were 3 House Republicans who voted to impeach Trump. One of them may hear lost in Michigan, but in Washington, Reps Jamie Herrera Bueller and Dan Newhouse were both in position to survive their primaries if early returns hold. For me, I hate the way things are. The entire game is so damaging. I'm Australian, so I have no say despite his faults. I like Trump because he was clear and loved Americans. Well, Trump's presidency was, man, so interesting, I think. As a Republican, Donald Trump did a lot of things that we had been working on for a long time and were really, really positive things. A lot of the work that he did has maybe been undone, but like what they did for corporate taxes, for instance, made the United States significantly more competitive. And we saw a lot of money move over to the US because of his policies. Like, that was part of why the US did so well, you know, even post-COVID. But, you know, he also did the whole trade war thing. And I think that it was a gambit worth taking. Maybe it would have paid off if he had won the next election, but it didn't turn out that way, right? But then on the split side, you kind of have all of the bads, like that he was constantly fighting with and hampered by, you know, like the actual the letter agencies, you know, like the FBI and the CIA and everything. So like basically have like the government working against him, basically. And then he started making some decisions that were just kind of a little bit out there. Like there was a point, I think one of the things that happened was that sometime after COVID happened, it's like he lost his center. It was like he was no longer connected with the people, and he was driven more by what his activists were saying online rather than an understanding of the general American public. Because I think one of the things that served him so well in 2016 was that he had an understanding of the American public beyond what the media had. So he would take up a position, the media would be like, oh no, that's like a really bad position to take. And then it turns out that it was really popular, right? And that kept happening over and over again. But then in the next election, that was not the case. That was not the case at all. And I think that that's why he lost. I think that his position on COVID, starting to dismiss it, I think, was like the thing that really ruined him. Because the polling was that the American public was concerned about COVID, right? Things changed when, well, I would argue that the period between when Bannon left and when COVID started, I would say, was actually probably his best period. Man, that whole thing is interesting to think back on too, because at the time everybody was saying, you know, like the media was saying, oh, Bannon, he's pushing this alt-right racist stuff. And I was always like, well, I don't think that he is. But the reality is that when Bannon disappeared, those people on the Donald Trump forums shut up. Like, they disappeared. Of course, they came back. Now, if you go to like patriots.one, it's like only those people. But so I do kind of suspect that Bannon was pushing some things that weren't good for him in the end. And that maybe if Bannon hadn't been involved, that there wouldn't have been the things like the Charlottesville incident and all that stuff. But I really don't think that's why he lost. I really think that if Donald Trump had simply said what he was supposed to for COVID, that he would have survived. I really think so. It was like, really all I had to be was, hey guys, you know, you should get your shots and you should be careful about COVID, you know, instead of just always constantly dismissing it. That's all he had to do is just kind of speak to the American public's concerns, and he probably would have survived. Possibly. But you get what I'm saying, right? It's like the Republicans do this with them all the time. So like, for instance, this whole argument over the election was stolen. Okay. So there's a group of Republicans that say, you know, unless you acknowledge that this still happened, then we can't vote for you because we can never win an election again unless the election is fair. And that's their position, right? And why do you have to take the position that the election was stolen? Why can't you just take the position that our election security laws are weak and they need to be improved, right? Why can't that be the position without having to make take a hardline position on something that frankly is not proven, at least not in a court of law or in the court of public opinion, right? You're just staking everything on an unpopular position, you know? You got to stop doing that if you want to win. And the reason that Donald Trump was effective was because he understood that stuff and he said, no, we're going to win. And now that he's kind of not the primary picture anymore, it seems that some on the far right have returned to their losing ways. That makes sense. I don't know. From my position, because my goal is not to be a Republican or a Democrat per se, right? My goal is to increase economic growth and opportunity by helping people better understand the world, right? So the place where I have a problem is when we have ideas about the way that the economy and the system works that are wrong and harmful to our goals of economic growth. And I see that too. But, you know, when we're talking about the way that the world works, well, if you want to have a say at the table, you got to win first. That's just the way it is. Let me just check through here. I'm just going to scan through this. Election denialism is still thriving. Trump takes a hit. Okay. So the Politico kind of make it seem like that it was a really big deal primary, but I'm not so sure if any of these are really that far out of line with expectations. Deep mistrust has developed between the White House and Zelensky. We need to read that. An anonymous detail buried in the same Tom Friedman column that Ed wrote about earlier. Almost as interesting as the news about the deep mistrust is the fact that Friedman is in a better position than most reporters to know what the White House is thinking. This is a guy who had a lunch at the White House with Biden less than 3 months ago. It's conceivable that his source is the president himself, which means there are two mysteries. What's caused Biden's team to lose trust in Zelensky? And why do they want that fact broadcast by Friedman in the pages of the New York Times? Now, the timing of Pelosi's visit could not be worse, dear reader. The Ukraine war is not over, and privately, U.S. officials are a lot more concerned about Ukraine's leadership than they are letting on. There's deep mistrust between the White House and President Volodymyr Zelensky of Ukraine, considerably more than has been reported, and there is funny business going on in Kiev. On July 17th, Zelensky fired his country's prosecutor general and the leader of its domestic intelligence agency, the most significant shakeup in government since the Russian invasion in February. It would be the equivalent of Biden firing Merrick Garland and Bill Burns on the same day. But I have still not seen any reporting that convincingly explains what that was all about. It is as if we don't want to look too closely under the hood for Kiev for fear of what corruption or antics we might see when we have invested so much there. I don't know about that. So the thing that we got to think about with this one, well, Zelensky is corrupt. Well, okay, so hold up. The issue that the United States always has in, you know, what I'm going to call proxy wars. Okay, probably the best example is Vietnam, right? The South Vietnamese government was like a very poor partner, okay? And they were not they were, man, it was just a really poor partner, okay? On one hand, they would take up positions and they were doing things that their citizens were very opposed to what their citizens wanted. And then on the other hand, there was corrupt dealings and things like that. Now, the issue is that when you're in a country like that, there is always corrupt dealings. And a lot of it is like you in order to play the game, you have to tolerate it to some extent because the corruption has so much power. You know what I mean? So I reject the idea that Zelensky is just in it to make money for himself, right? But it's definitely going to be the case that you're going to have, you know, there's going to be things pop up that are going to kind of be like, you know, we don't completely know what's going on, but, you know, he's probably having to make tough decisions over there on that. But when I'm reading this, I kind of get this other thing, which is kind of like question about, I almost want to say competence. You know what I mean? Like, they're worried that they're going to give them a bunch of money and that it's just going to get wasted, right? And that the Biden administration is thinking that is a big concern for sure. But there's a lot of corruption in the country anyways, so you can't expect him to be completely free, right? Man, the they have come down to the lows a couple of times here in the treasuries, but so far it has been quite directionless, hasn't it? And still 15 minutes before the open, though. Oil is retracing its strong out of the gate rally. Haven't heard much on my news squawk today. And there's not much on Twitter either. Larry Summers tweeting about former Treasury secretaries backing the Inflation Reduction Act. Wasn't somebody speaking to... Well, we've got multiple Fed speakers. Right. So the next one is still going to be... I believe that Bullard already spoke, so the next one will be Harker at 10:30 Eastern Time. Right? The question is can I manage it? I mean, I haven't taken the profits yet, so anytime that I end up holding something overnight, you know, I go through this like nervousness sort of a thing. Like it's I'm kind of like a dog, right? That finally caught the car. You know, you don't know what to do with it once you have it. But I think that my plan is I want to hold it at least through the Fed speakers today, if not up to non-farms on Friday. We could even YOLO it on non-farms, to be honest, because if non-farms ended up being good, that could really push, you know. But I'm not liking the setup for the non-farms, because right now the consensus estimate is 250. Right, like they're expecting a low. It seems like that no matter what, it's going to be lower than last month's. If it was higher than last month's, then that would be like a big change, right? But that would have to be a really big beat. So that's where I don't really like the setup for non-farms. But right now, I think the thing that's driving the action the most is the Fed speakers and the Federal Reserve pushing it back against this pivot narrative. I have to say, I don't remember who it was that I was listening to yesterday, but I was listening to somebody on YouTube talk about the Federal Reserve, and they were all gaga about the Federal Reserve meeting, saying that the Fed backed off of forward guidance and that was dovish. And that is just like so... I could not understand how they had come to that conclusion. Was like they gave up the forward guidance so that they still have the ability to shock the markets, because what happened was they came to like the big event. Stuff happened just before the big event that said, oh, like we're gonna have to be more hawkish than we expected, and then they had to do a complete 180 and hike 75 basis points in the space of 2 days, and it just was absolutely like totally disrupted the markets, right? And they're like, okay, so trying to tell everybody that we're going to give you a really long advance about everything that's going to happen is no longer realistic. That's what that was about, right? Forward guidance is a dovish thing, right? Forward guidance is, don't worry, guys, we're not going to raise rates or do anything crazy without giving you plenty of warning, right? Taking away forward guidance, that's hawkish. That's, hey, guess what? We could just be crazy and just do stuff, and you won't find out until the meeting, right? That's my reading of it. I didn't think that the Federal Reserve really said anything on Wednesday, and anybody coming out saying that that was a pivot or whatever is making stuff up in their head that they want to see. It's not the reality. It's certainly not what the Federal Reserve intended, you know? So we'll see how far this goes. I kind of suspect that the Federal Reserve wants rates at 3%, but we'll see. But we'll see, because really 2.8 still seems kind of low, don't you think? Don't you think? We get some news. We got some news at the top of the hour though, so we'll see. We'll see. I'm reading through on Twitter and just reading all of the comments on the treasuries, and this guy Jedi Marcus 77 says, I am probably missing some other reason / narrative, but it seems the treasury futures took the Fed blabber yesterday more seriously than the low IQ equity indexes. That's funny. Dovish, the Fed are determined. I don't know if I would call it determined, David Westernall. I think that they what I see at the Federal Reserve is this. The American public is upset about the inflation, and they're upset at the Federal Reserve because they think that the Federal Reserve didn't do his job very well. So their primary thing right now is to make sure that the American public understands that they take inflation seriously and that they're going to do whatever it takes to get inflation down. The other thing that I see is that the Federal Reserve is fighting back against certain false narratives in the markets about how the Federal Reserve works. So the two big ones that I see is, one, that the Federal Reserve will lower interest rates to keep the economy afloat. That's not true. The Federal Reserve's primary objective is to price stability and then maximum employment. And those are, they believe, those are two goals that reinforce each other. That you're not going to have maximum employment if you have price instability. So that's why they feel that their directive is first to get inflation under control. Okay. The reason why the market believes that is because we've been in a structurally deflationary environment for 10 years. And anytime that anything happened, they had the ability to lower interest rates because you had to fight deflation. That is no longer the case. The environment that we're in right now, at least, and it may be more persistent than just a year or two, is actually inflationary. And there are kind of some signs that things might get more inflationary, like the way that things are going with China and everything could get more inflationary, right? So that's why they're wrong on that one. The other one that I think they have to fight back against is the idea that the Federal Reserve can't raise interest rates too high because that will increase the debt burden. I don't remember who it was that said that, but I remember there was this key, fund manager or something that said, yeah, like they can't have interest rates over 4% or something like that, or it's just going to destroy them. And it's just not true. It's just objectively not true. Of course, the debt burden is a real problem. Of course, at some point, if we don't do something about it, the United States is screwed. But the general economic consensus has been that you're perfectly fine to take on debt as a country until it becomes like 2 times GDP. Then it becomes unsustainable. The United States isn't anywhere close to that. And they won't be hitting that until like 2050, even if interest rates raise considerably. Like when they did all of these calculations, they were assuming an interest rate of like 4.5. Okay. So yeah, number one, the debt is fine. Or at least the government thinks that the debt is fine. And number two is that that's not the Federal Reserve's problem. That's the Treasury's problem. The Federal Reserve's does price stability and maximum employment, right? So the idea that they would keep rates low so that the debt burden remains light is not supported by anything. It's kind of like, and the Federal Reserve will come out and they'll say, no, we don't consider that. We don't factor that in. And the people that believe this just ignore it. They just say, well, but the Fed can say what they want, but we all know what's really going to happen. Okay, but it's not supported by anything. And these have been two narratives that I think that have kind of supported treasuries as of late, that the Federal Reserve is going to have to pivot soon. So, you know, this pushback from the Federal Reserve is really about like, hey, markets, there's a misunderstanding here, because we will raise rates, right? I think there's even kind of a little bit of a chicken going on here. I think there's some people that think, yeah, we're going to go short the treasuries and we're going to bring rates down and we're going to force the Federal Reserve to follow us. And I don't think it works that way. And I think they're finding out the hard way the last 2 days, right? So I'm getting a lot of news squawk stuff about OPEC right now. Oil is coming back down. You know, kind of, okay, Fed's bullard, we are going to be tough to get inflation back to 2%. I want to talk politics, but it's not actually that interesting to me right now when I think about it. The sad thing is that after Donald Trump lost the election, the media kind of like quieted down about politics. It was like, with Donald Trump not in the spotlight anymore, everybody kind of tuned out. And I think to some extent they even kind of quieted down because they just didn't want to amplify what was going on in the White House. Now maybe that has shifted because the public has definitely turned against Joe Biden, right? But there's still kind of this thing that like politics are boring again. You know what I mean? And normally that wouldn't faze me, but I think it has. I think that my interest in politics has died down considerably in the last year when it probably shouldn't. It just kind of shows you that the most devastating tool that people in power have is their ability to manipulate public opinion, right? Like, let me tell you what. If I wanted to screw over retail traders the most, you know what I would do? After a pandemic, I would increase the amount of social media and advertisements and so forth that they see surrounding the stock market, right? I would be doing everything I could to get as many of them to get Robinhood accounts and start day trading. That's what I would do. And I really think that that's exactly what happened. It was like before the pandemic, I started to see like the robots, all of the advertising algorithms start to pick up on it. And then after COVID, like it really took off. It was like a concerted effort to get people involved in the markets all of a sudden, which at the time I thought was great. Yes, let's get more people involved in the markets. But the way that they got them involved was really detrimental to people in the end. And I don't think that anybody learned anything. Super Bowl had a Coinbase advert. Yeah. You notice that since that, it kind of died down though, right? It's not getting pushed as much. Algorithms aren't pushing it out to people as much. It's like they've got a little switch over there that says, do we want the public to be interested in the stock market or not? It probably is just a coincidence, but it's one of those situations where it was like, well, okay, I can't prove that there's a conspiracy theory, but what would be different if the conspiracy theory was wrong? Was true, right? I didn't say that right. Maybe it's not true, but if it was true, what would be different, right? Because what we're seeing right now is completely in line with the conspiracy theory. I do see a tweet here about Taiwan. Defense Ministry says 22 Chinese aircraft crossed Taiwan Strait median line. Okay. That happens all the time, though. Okay, the OPEC on OPEC, the meeting noted that the severely limited availability of excess capacity necessitates utilizing it with great caution in response to severe supply disruptions. We had there for a little while a good little excursion to the downside in the treasuries, but now they're on the top side of the range again. Okay, Seth, someone asked about liquidity holes yesterday. Your explanation of you need momentum out of the hole didn't make sense to me when I looked back. Wouldn't it be easier due to less liquidity? Well, okay, so the issue is in a liquidity hole. So let's go back and draw our little picture here, right? So there's going to be a certain number of people that want to buy, and then there's going to be a certain number of people that want to sell, right? And then these people here in the middle are going to get filled. So then next time around, you're going to have this hole right here, right? Okay. We're stuck in the hole. Okay. So the issue is you can move around inside of this hole and it's slippery. But to get outside of the hole, there's going to be all of these offers and these bids down below us. And the issue is kind of like when we're in a hole, like, you know, people that are smart, they know it's going to be hard to get out of that hole. So it kind of dampens the demand and so forth, right? So what you want to see is you want to see these smooth out. You want to see these smooth out so that the curve is just kind of becomes like that, right? And now you can move normally again. Okay. But if we're in the liquidity hole, in order for us to push out, you're going to have to eat through all of those bids. So it gets a little bit harder to move out of that. It'll be like you had a strong move in here, then you'd think, it should be very easy for them to move out of it. But it ends up not being like that, right? So I'm seeing some signs that they're going to bid out of here. So right now, I don't think I would say that there's necessarily a liquidity hole or anything like that. The markets have been kind of directionless. Treasuries did have a little bit of a tick up there. And the S&P 500 is starting the morning out with a bull run, at least so far. But the cumulative delta on this bar is a little fishy, so let's hold out. So liquidity hole is basically an area with low liquidity in range. Yes. But I got to put one additional word in there. Low latent liquidity. Okay. So like what you can see right here on the DOM is resting liquidity. Resting liquidity doesn't necessarily matter because participants don't want to show all of their liquidity, right? They will let it trade and then they will add more liquidity, right? And then they'll add more liquidity and add more liquidity. So it's kind of latent liquidity. So the way that you can see it in the latent liquidity is just watching how much it takes to trade every time, right? You're going to see there'll only be like 50 on it. They trade up, then they only bid 50. And then they trade down and they only offer 50. And it does that back over and over again. And it's just through that whole period, every time that it ticks up or ticks down, they're not putting a lot of liquidity up there. Or when they do put the liquidity up there, they pull it as soon as anything trades against it, right? So there is a little bit of an art to seeing what the latent liquidity is. Okay, that's what makes it hard. But yes, it will be an area, it will be a range of low latent liquidity. And number two thing though, and here's the part that makes it a little bit easier, Stephen, is that you got to understand what creates the liquidity hole, right? What creates the liquidity hole is either a lot of volume trading all at once in a narrow area, sitting in an area for too long, or the liquidity just being strained by a strong move, right? So typically what you're going to see is you're going to see a trend, right? Once I see the trend, I'm going to be looking for the liquidity hole. It's either going to be like a really large order that trades, or it's just going to be a place where they like extend a little bit too far and snap back, right? And then allow will trade there, and then that's the liquidity hole. Or it'll come back and it'll just kind of sit there and people get bored, and then the range develops that way and generates the liquidity hole, right? So if you know what causes it, then you can kind of be on the lookout in the spot to see it form. And the place where I think that the liquidity hole becomes the most useful is in like the trend trade, right? It's like you got in a trade and it trended and you have a profit. Now you're thinking about, where do I want to get out? Well, the place where you're going to have the most liquidity and it's going to be the easiest for you to get out is going to be the liquidity hole. Of course, after the liquidity hole heals, there could be another leg, but you're going to have to make that decision based on what is causing the trend, right? Well, there was definitely some volume to the upside there. I don't think that I have to worry too much about that, just because of it's so slow that might not necessarily be a significant thing. It is it's complicated, but it's not. You'll see it. I'm telling you, especially you watch the 10-year, man, you'll start to realize that it is the most consistent pattern that there is. There'll be a strong trend, they'll form a liquidity hole, and then they'll just get stuck in that spot. It's kind of funny how these things work, because we're like, oh, there seems like there's consistent patterns in the market. Well, there are. It's just those patterns kind of make it hard to know what it's going to do next. Right? I don't know. I'm kind of feeling like, well, no, we still got a speaker. I think I can chill, but I'm not liking this trend against me. They did break out of the range. They didn't break out of the range in the 5-year yet, but it's kind of threatening it. Right? There's some flattening involved here. I'm surprised that the treasuries are moving up when the equities are moving up like this. You would think that would mean that would push treasuries down. What am I seeing in the dollar? I'm seeing a little bit of dollar weakness. Not seeing much in the 6J. 6J still looks pretty directionless, like the treasuries do. What is the statistical probability of continuation? There is none. Like, that's the whole thing. Is it doesn't really help you tell which way it's going to go next, does it? It's like an area that really, for direction, is like the worst place to look for continued direction, because the forces are that it's just going to stay where it is, right? So whether that continues through or that ends up being a reversal depends entirely on whether after the liquidity hole heals there's going to be another large meta order buying or selling, right? That's why I'm saying, like, they make good exits, right? Because once the liquidity hole forms, your ability to tell what it's going to do next is significantly diminished, right? Unless you really have, like yesterday we knew based on the Fed speak that they were just going to keep going, right? You have a really strong driver, and you can really easily predict the order flow. Then you can just see them plow through them over and over again. But like today market has been really directionless. If when we had gotten there to that high, I had seen some large transactions and some evidence of a liquidity hole, that would have been like, yeah, don't trade, because there was no way to know what it's going to do next. Yeah. It's like there's these patterns that exist because of the market microstructure, but those patterns aren't very helpful in terms of, okay, here's the price and here's the situation. Is it more likely to move up or move down? It doesn't work that way. Why doesn't it work that way? Because what matters is the orders that come through. So that is the situation. That is like the current liquidity conditions. It's a part of the formula, but you're missing the other part, which is the future orders, right? Current conditions plus future orders equals where it's going to go, right? If you know what the current conditions are and you have something that tells you what the future orders are going to be, then you can predict where it's going to go with high accuracy. But you have to have something that's going to predict the future orders. You know, so if there's a liquidity hole, then what we get from that with the current conditions is it's going to be harder for them to move away from that area, right? If there was a large meta order trend coming through, and then that's a condition that will make it easier for them to shift price the opposite way. If a large meta order the opposite way comes, right? That's kind of what we got yesterday. Was there was a strong meta order buy because of the Pelosi thing, and then we had the strong meta order sell from the Federal Reserve pushing back, and that's, you know, because they had damaged the liquidity below them. It was really easy for them to fall, and then it just turned into a strong trend. Would 119.30 be a hole? I wasn't watching at the moment. That right there does not scream liquidity hole to me yet. Okay, so like they're at 29.5. That is a little bit more like it, right? See, they're only offering 50 and 150, and it's going back and forth. And when they traded down, the 29.5 left really, really quickly, right? So that might be a hole. That might be the beginnings of a hole. That might be the beginnings of a hole. Do you see they carry it back up to 30, and then what happened? Fell back down? They're only bidding like 100, right? That's a hole right there. Now, in this situation, they might have enough to overcome it. They are awfully close to like that 120 even, so they might be able to get the buy orders to pull out of it. We are going to get a number here in like a minute, right? It's the final US S&P Services PMI final, looking for a reading of 47. And then 15 minutes after that, we get the non-manufacturing PMI and factory orders. Well, I'm kind of thinking that I might want to get out because I don't like the trending going into this trade or this news. Okay. We can get back out to 789. Okay, so the reading was 47, but we got 47.3. They're not really reacting to it. They're probably waiting for this news at the top of the hour. Could have gotten a better price. It's okay. 164 is still awfully nice. Can I see this over here? Yeah. That looks good. One of the things that sucks is in the rhythmic thing. Oh, I don't know if I can. There we go. In rhythmic's thing, like it'll tell you what your total profit loss is, but that doesn't update correctly the way that Jigsaw's does. Jigsaw's is kind of based more on the current bid ask. So this one didn't show me, as it was still showing me like $10 under the whole time. Yeah, would you look for low liquidity on the inside prices to determine one? Yeah. Yeah, because the whole thing is like the liquidity providers don't seem to want to provide liquidity in that spot. Now, seeing like 1,000s trade, that is not necessarily indicative of a liquidity hole, right? But it could create a liquidity hole. Right now, it looks to me like there's a little bit of a liquidity hole, but there's enough activity right now that it's not a dominant factor. Man, they scared me out, and now they come back to the balance. Well, another thing that you're going to see, another way to think about this is that these point of controls, point of control is very often a liquidity hole. In fact, I'd say almost always point of control is a liquidity hole, right? But what you're really trying to do is you're trying to identify the spot that's going to become the point of control. So right now, there's a sign that 29.5, if we were to continue to see some upside pressure, it's a possibility that 29.5 could become that, right? I feel like I sold there and they're coming up to try and pressure me because I don't. I have this strange theory that there might be some robots that are watching the cumulative delta and just trying to move things around to scare out the retail traders. So if I have a swing position and I sell out of my swing position, they might think that that's a short. I'm probably just in my head, but I can see it kind of come up there like that and kind of start to pressure me for seemingly odd reason that kind of makes me think that. It's hard not to feel like that's what's going on. Why the point of control might be a liquidity hole, let me note it down. So the thing about a liquidity hole that's interesting, that kind of ends up creating a lot of the behaviors that we see, is because it's an area of low liquidity, it's difficult to get away from that location. Now, you would think because it's an area of low liquidity, you're not going to see very much volume trading there. But the reality is that price ends up staying there for so long that you actually end up having more volume trade in the liquidity hole than anywhere else. And so it is very often the case that the point of control on your depth of market was a previous liquidity hole. And that's why you will get all of these things where, like, you know, it moves up and then it seems like it slips back down to that point of control again. It's because that's, you know, where the liquidity hole was. Right? But that also gives you kind of a couple of clues, right? Like if it's been more than 45 minutes, then the hole is probably healed. It probably doesn't matter anymore, right? So this whole idea that we have a tendency to come back to the point of control or like the previous days, if it's been more than 45 minutes, probably doesn't matter anymore. Right? But what's more useful to us is being able to predict where a point of control may be in the future, right? And if we see that area of low resting liquidity, then we might get that. So we're seeing it a little bit there at 30, but it's not too strong. So I think that we kind of got the beginnings of a liquidity hole, but probably not enough to stop them here. We do have news, so. You know what? I should approach this, teaching this to you guys differently. Okay. Let me try again here. Okay. A liquidity hole is an area of low resting liquidity. Here's how you use it. If you see a liquidity hole clearly forming, realize that it might be 45 minutes or more before we get another move. So if you're not in a position, wait 45 minutes. If you are in a position and you don't want to be in it for 45 minutes, get out. Right? And if you absolutely insist on getting in a position when the liquidity hole forms, probably you want to get a price that's below the center of the liquidity hole, right? That's how you use it. That's the thing that's the most useful about it. So liquidity holes form. They take about 45 minutes in the treasuries to heal, right? How does that help? That's one of the biggest most useful things for me, right? Because I would see something happen, right? Some break of a high or I'd see some order flow signal, volume traded. It get me all excited. I want to go and I buy it. And it kind of goes up a little bit and then it comes back and it falls back into the liquidity hole. And then I sit there for an hour and it doesn't go anywhere before finally going back the other way and I bail, right? And that happened to me over and over. It was the most frustrating thing. And then when I realized all of the math behind the liquidity hole, I said, oh, okay, it's probably going to stop. I'm going to get out. Or, oh, this is like a really bad time to take a trade. I should wait 45 minutes. And then I can wait 45 minutes. I can kind of get a period where I get a little bit more information. Then I can make a determination. And I take way less trades because of that. Right? So it's really limited some of my worst downside benders, right? Because I know. And have you seen how many times in the last week where it was like, okay, I could really want to take a trade, but this is probably not a good place to do it, right? And then I end up really being happy that I didn't take it, right? Because it gets stuck in the liquidity hole. Okay, well, they come back to the highs, so I think that me getting out there is okay. I'm a little concerned about this news all of a sudden. When I was thinking about it this morning, I was thinking like non-manufacturing PMI, hey, that might actually be a good thing for us. But it seems like that I'm not getting continued downside from the markets being concerned about what Federal Reserve is going to do. And they may possibly be trying to front run the PMIs. And it also seems like they think that the PMIs are going to be bad. So I decided to get out. We'll see if it was the right decision. If it ends up being, they end up being wrong and the PMI is a positive number and the treasuries go back to 3%, then I'm going to be super pissed. But at the moment, I don't think it's worth the risk. Wow, thank you. So was my other explanation about it better? I should make just a whole video about liquidity holes. Because the math is really interesting. Like here's the thing, is that for years and years and years and years, they had all of these, they noticed these things, like there's a square root law of meta order impact and all of these other things. They're like, why would it be a square root? Where does this square root thing come from? And then they did this study and the math just all perfectly worked out and matched up with everything else that we've seen. So it's still kind of a theory that the liquidity holes are what causes that. But I'd say at this point it's a pretty good bet that it has something to do with that, because it fits in with the evidence really well. Right. So the math behind it was really quite the breakthrough in market microstructure science. Look at him keep going. Well, I must say it was worth it for me to hold it overnight, because I was more like $100 and I got 160 out of that. I could have gotten almost 180. I really was getting excited that I thought it could be 200. But look at the way that they're trading ahead of this news. I really got to wonder. And I mean, they've done this a lot ahead of news like this lately. So that makes me doubly suspicious. Oh my. All pundits' last day at Hot Air will be Friday, September 2nd. Not surprised, actually, because I don't think that anybody on that website enjoys his content. I think that it's far too speculative. I'm speculative, but he just makes a bunch of stuff out of the Twitterverse. I think he spends too much time on Twitter. Oh, that's actually interesting. You know what? I don't know why I like that website so much, but I visit Hot Air a lot. I probably visit Hot Air more than any, well, other than my trading news. Man, look at it go. Look at it go. This is really starting to roll into something. What is going on? Like the way that it's doing that, there must be something like maybe the non-manufacturing prices paid is like significantly lower than last time. It was 80 last time, or maybe the factory orders is going to have a big change. They must think that there's something in this news that's about to come out that's significant. Thank you for your knowledge. Well, I appreciate it. You know what, Stephen, when I first discovered this stuff, I was kind of like, oh, well, I should just keep this all to myself. Right. But I realized a couple of things. Number one, it doesn't really tell you what's going to happen. Right. You still need to have predictors of order flow. So giving it to you doesn't necessarily give you any kind of advantage over me. Right. It just kind of puts you on par with things that you've probably everybody should already know. The other thing was that it actually was popular knowledge. It was like, there's all of this market microstructure research that tells us a lot about why markets move the way that they do, and retail traders don't know a thing about it. They're still stuck in the charts. That's when I kind of realized, like, what we need to do is we need to teach them this stuff, and we need to teach them why this stuff matters. And you know, because then we can start talking about more advanced stuff. Right now we can start working on strategies based on all of that. Man, that they are really pulled. The order's really pulled there. Right. And then that means, you know, you might find something that will end up being useful to me in the later on down the line, right? So taking the discussion to a new level ends up benefiting everybody in the end. And that's why I did it. Yeah. So I appreciate it. But what I appreciate more is you utilizing that information and sharing the channel with other people. Because what we're really doing is we're making the retail traders better, and that's going to make the markets better and more efficient, and hopefully that will provide more opportunities for retail traders as well. NASDAQ Killer, how are you? Look at that. Nope. If they thought they knew something, they were wrong. I don't know what to make of that whole sequence of events, man. I don't want to get involved here. I guess it could have held that, but man, oh man. So the 6J got hammered pretty hard off of that. Gold, seeing a little bit of downside movement in oil, and of course the S&P 500 as well. So this is what we're getting right now is good news is bad. Okay, so let's go back over the numbers here. US ISM non-manufacturing PMI 56.7 versus an expected 53.5. That's a pretty good number and a pretty good beat. Factory orders month over month 2% versus an expected 1.2%. So that means that there is more activity going on, and that things did improve in July. And then prices paid 72.3 versus a previous reading of 80. So that is a decline in the inflationary forces. So that's maybe a buoy for them, but probably not as big of a deal as these other things. But if anything, that kind of suggests that the Federal Reserve's actions have had an impact on inflation, and that impact has been good for the economy overall. That is a big order there, 23.5. So the way that it's moving right here is not one that I want to get involved in. I think it could be a little slippery here. But I do see the possibility for maybe some more downside action. Guess I need to make a decision as to whether or not I want to try and tag along again or not. I'm kind of suspect though that it's going to come back to our hole at 27. Your take profit hit and you set it far away. Jeez. Yeah. Well, the market really pulled for that one. It really makes you wonder why the market was moving the way that it was before the news, doesn't it? I can't really have no idea why they would be moving the way that they were. Well, equities, as with it seems like everything else they've done over the past week or two, still just doesn't seem to react to anything, does it? Hmm. $791 is where I got out, right? Yes. 791. Oh wow, it just came right back there. My goodness. I looked at 2791 and I was like, well, maybe I get back in. And then I go and I do that and I look back and they're back at the lows. I don't need that kind of volatility in my life, guys. I don't think so. The issue that I have with this is I think that this means we could go lower today, but they're probably going to fight with it a lot, right? Like, if I want to get into a new position and not take very many adverse ticks, it's not going to happen, right? Like if I want to, I'm going to have to risk like $30 to make $50 to make another trade here. If I want it to only, if I don't want to have more than 10, 20 ticks against me, this is not the action to take that trade. Just look at how much volatility there is behind it. It's relatively high volatility, and they did test that bottom end there multiple times and are backing off of it. Wait, so now the S&P 500 is buying off of this? What the what? Dude, we are getting some steepening. Why am I not seeing it on my spread charts? Let's reset things. I was getting some hints of steepening, but it may just have been that my charts were, or my DOMs were out of sync with each other. The music makes me want to trade 100 lot on the ES. Well, that's good. You know, here's the thing that I think I'm learning with the music. Oh, they're fighting there, 24. I thought before it was like, well, people will like the music or they won't like the music. And, you know, how many people that don't like the music versus, you know, that will, how will that affect the stream numbers? That's the way that I approached it. But now I'm realizing that the music has an effect on us, and that effect is positive, and that alone makes the stream better because of that. And that in the end wins out over people that maybe didn't like the music. Yeah. Because we've been, and our numbers have been better this week. We're still a little sparse. It's still summer action for sure, but I don't know, man. Like, so here in the 10-year, when I'm watching the order flow in the 10-year, I'm kind of like, it doesn't look like at the moment this is the best place to try and go in for another short, right? But then when I look at the micros, they're like right on the edge, right? Because of what the 30 is doing. But that kind of suggest that you're not in a very good spot to take a trade in the micros on a relative basis. So the thing that's difficult with the trade that I was in, you know, of course it was a good runner. That was great. Okay. Getting yourself in the position to make a trade like that is really hard, right? It's really hard. And then once you're in it, you know, you want to write it for all it's worth. I could have stayed in and I would have been okay. But I do think that it was prudent to get out. Because it's not like we're just, I mean, this could just be fighting. Look at that bid there. Look at that iceberg at 24.5. I just personally cannot trade with the music on because I would always crank the volume and turn it into a rave. I definitely have the tendency to like just focus on the music. I can kind of go both ways. I can focus on it and I can just completely ignore it. So when I'm talking, that kind of turns that side of my brain off. So I really do just hear the music as like background. It may be helping me keep the creative and visual centers of my brain more active though. So it could be helping. YouTube is about the aesthetics and beauty of the picture and wholesomeness on the ears people are kept. Maybe. Okay, are they gonna go? They're gonna embarrass me here? Looks like they might. I could choose to get in at any moment though, right? I'm just kind of like, still doesn't feel worth it to me. Man, the 5-year pushed though. That's flattening. Yeah, look at some of the fight there in the micros. Do you think that the market is overreacting to this news because people were taking bets the other way and ended up being wrong? Either way, like one of the issues that I have here with taking a trade was that I did not expect this piece of news to drive this much activity. They've driven almost 30,000 contracts short in the 10-year. That is, I mean, yesterday I think that the whole move ended up being 60, 70,000 contracts, right? That's a lot of contracts short. The 730, yeah, the 730 line is the open. Yeah. Look at her go. So I if I wanted to get back in, I could have gotten in. I chose not to. I missed a move there. That's okay. I mean, it's a mistake. I'm not gonna mull over it too much, but it was a mistake. There is some like significant trades pulling in here. So the issue that I have now is that they're probably forming a lot of pockets above us that could suck them back into it. Right. Have you ever considered market internals like Tick or Tyran or something like that for triggers on an automated system? Yeah, so I looked at that actually one time, Mulder. We had it for I think a month or so, and the results of my investigations into it was that the market internals were very, very useful, but in the end only got you break even. They didn't appear to actually be providing an advantage, so I stopped subscribing to them. But I found in particular, if you were using the what was it, the Tick, you use the Tick and you put a moving average, like a smooth or a super smoother moving average on the Tick, and then just, you know, traded when it crossed the line. You know, you would break even. It was good, but it wasn't an advantage. See, it's struggling to push further, but this is just difficult action to try and pick spots. Well, they're not hitting 18.5. Like, the volume in trend is definitely to the downside. It's just I'm just worried about what kind of holes you might fall back into. And they've got this whole thing all the way back to 22. No FOMO. Well, you're gonna get FOMO though, right? Well, when it comes to the emotion side, I would always be a little bit weary about attitudes that are like certain emotions are bad and are detrimental to our trading, and we need to prevent ourselves from feeling those. I think really what we need to do is we need to just understand what we're feeling and not have that affect our decisions, right? So right now, I mean, there was a strong move to the downside. We could have held it. We made the decision that we made. Of course, I'm going to feel like I missed out, right? Because it did. I did miss out, but that shouldn't force me into a bad position right here, right? Because the last thing that I want to do is come in and go short down here at the low and then get stuck in a $30, $40, $50 pullback before, you know, getting in again and that sort of a thing. Well, at 8:30, we're going to have a Fed speaker, right? Now that's an opportunity for us, but where do you take the trade? I'm looking around here at the other assets. So it's 792. So let's just say 79. And 20, 30, 40, 50. So that would put us at 200 now. Do they live stream the other speakers? It kind of depends on what the event is. Since none of these events are on my calendar, I'm just gonna have to wait to see if when the event starts, if anybody on Twitter or the News Squawk gives us a link. Man. So what I saw there was I had some concerns about the holes sucking us back up, but the volume is just not backing off at all. Maybe I should just stop overthinking this, close my eyes, and click. Another thought that's going across my mind is that, you know, what we're seeing is just a continuation of the orders from yesterday, and they were just waiting for the ISM to be through with before they came through, because it's just like such a strong flow. It's a messy flow for sure, but it's a very strong sell. I mean, it's been 40,000 contracts in 17 minutes. That's a lot. That is way more than I would ever have expected off of that news. I don't think that you can explain this flow just off of the news. Surely it moving the opposite direction before the news might play a part, and surely the move that we got from yesterday plays a part. There you go. There's another $10. Good grief. Well, there they are getting shoved. See, that right there is exactly the sort of thing that I'm worried about. Okay, so it does look like you're going to get a bit of a pullback. Let's see how far they go. Heat 5. There's nothing on their website in the speeches page. Yeah, I only got this off of News Squawk's morning blog post. So just be aware there are more Fed speakers today, and I believe that there's supposed to be one at the bottom of the hour. We will also get oil inventories at the bottom of the hour, right? And I don't think that the OPEC thing is over with yet, right? Was that all they're going to give you on the pullback? When I'm looking at this, I'm still kind of feeling like I want to go long rates again, and that we could get some more trend, and that there is a possibility that it trends all day. But I also feel that the volatility is too high for me. Right? Like if I had held that through that, I think that would have been an unusually reckless decision for me that would be paying off. But I'm not sure that I can justify getting myself into a new one. Oh, that's interesting. You had an algo that went short there, huh? It was a little kind of out of nowhere the way that the S&P 500 turned back around, wasn't it? Right? So I was thinking about 285, right? We've already gotten at least 5 to 10 ticks against me. Okay, so the speech is at a fintech conference. So it's unclear to me based on that how much he might actually comment on the economy. They're continuing through here a bit. Another way of thinking about the action that we have right now is, again, we have current conditions, future orders. We do have something that kind of suggests that we could see more future orders. We've already seen a lot of future orders, so I don't know how many future orders we really have off of that. That's enough to move us, right? But then what are the current conditions? Really poor liquidity. Very slippery conditions, right? So can we make a prediction off of that? Yes, but the prediction that we can make off of that is that if you take a trade, you might make money, but it's going to go like $50 against you first. Because, I mean, this retracement has been... Oh, actually, it's not too bad. They got to, let's say, 8.6, and now we're at 8.4, so 2 basis points back. Maybe more. We'll see if they bounce. The initial area was kind of like 17, 18, so we'll see if they get sucked back into 18, if they decide to push back up after that or what they do. The thing that's going through my head the most right now, though, is that was 40,000 contracts short. Like, I really question the number of further short orders that we can get, right? Even though I think the right choice is still sell, where are those sells going to come from? We sold way so much there. In this current environment, the risk to reward will not make sense. So what do? Then you don't take a trade, right? I think that the risk reward can make sense, though, right? I mean, we could have. So the thing was, let me go back for a second, because I'm about to say something that's like, well, why didn't you do it, right? I think in this situation, you could have, after that PMI, gone short, and it would have been a great trade, right? So why didn't I take it? Well, because when those numbers came out, they didn't scream short to me, right? 56.7 versus 53.5. When I come in and I look at the numbers, well, that is a pretty big beat, actually, and it is higher than the previous months as well. Okay, so that is a really strong number. Okay, it's just, is that 40,000 contracts? You know what I mean? So that's why I didn't really want to mess with it afterwards, because I had an opportunity to get back in right where I started at, and I didn't take it, right? So that's why I didn't do it. But, you know, if you had taken it early enough, I think that the risk reward does make sense, because it's not just risk reward, it's also probability, right? If you have something that actually gives you a real probability, and not just like you've extrapolated it based on past situations, that it happens this way X% of the time and this way X% of the time. No, I mean, you have something that you know is going to directly affect the order flow and gives you a good chance of predicting the direction, right? You know, you can factor that in as well. And so if your risk reward is $50 risk, $50 reward, and you have something that, you know, is predictive of the order flow, you can take that trade. But I would just add that anything you can do to try and, you know, like use what the flow is doing to your advantage, you really want to do. So in this situation, if we had tried taking a continuation, like it would have been a good idea to take it at like 25 and not necessarily 22. Of course, both of those would have worked out, but you know, if we know where the hole is, right, and we're looking for a continuation, we would rather go short at the top of that hole, right? And that should theoretically limit the action against you. Right, I accept the upside down R and acknowledge it might be this way for months and dial down number of trades and close down after daily profit goal is hit. Now that's a good question, Octavius. Because here's what's happened to me is that there will be days where you know, I catch a win. I'll be really happy with it. I make $10 and then I'm like, okay, I'm done. Don't need any more than that, $20 or whatever. Then I'll have days where I'm losing and I'll just keep going and going and going. I'll lose $100 all at once. Right? When I know that I have the advantage, I don't push it enough. The reason I was so happy about yesterday was that I knew I had the advantage and I pushed it. The reason I'm a little frustrated with this move is because I'm not 100% sure I have the advantage, but I could have made money on it. But I mean, look at this. The degree with which this is coming back now we're touching 20. Jeez. Right? Again, the top of this was 60. So you're already $40 pullback in micros. Yeah. It kind of pains me to say that I made the right decision, but I think I did make the right decision. Not the right decision after the real trade was to have gone short and taken profits down in here. But when I missed that one, not getting in it further, I think it was the right thing to do. Because these flows are suggesting to me that this was not the kind of action that Seth gets. And I tell you what, here's the other thing that would happen is if I get in that trade and I take $40 against me, like I could be full tilt at that point, right? I could be full tilt. But instead, you know, let's split yesterday's profit between the 2 days because I only took it today. That's still $80 a day. That's still my largest win on micros before that was $70. So I still have a lot to be proud of, don't I? Okay, coming back from 22 a little bit. Let's reset things. So here we're going to get the oil. This could be interesting, wouldn't it? Now, that it might be this way for months, yeah. But here's the thing with that, Octavius. If we come back over here to my chart of the daily 10-year. Yeah. Okay. So, like, here I have the ATR. Oh, wait. I have this, dude. Let me fix this. I need to use my new indicator. It's super lovely. Speculator SAF. Multi-ATR. Ticks. Okay. So, like... Okay, oil number is a build. It might hurt oil, yeah. Okay, so when the ATR is like 10, 5 to 10 basis points, maybe even up to 16. Okay, in this area right here, like that's good trading for us. When it's like over 20 basis points, like these ones, these days are dangerous to trade, man. Like again, first trade is the best trade. So if it starts trending and stuff, you're already in. Hold it. You know you have the advantage. Write it for all it's worth. But if you miss the beginning of it, those are dangerous to trade, right? Think about this crypto. You know, I said it in the last video that I made, right? About what was the last video? Oh, about the treasuries, right? There was this cryptocurrency firm that was trying to go short Luna during the Luna collapse. Okay, Luna collapsed like 80%, right? So they were the right direction, but despite that, they basically lost all of their client funds because they kept getting stopped out of their trade. It was like $20 million. Can you imagine that? Losing $20 million and having the direction right? Trading those super outlier days, if you don't get in early, leave it alone. They're dangerous. The pullbacks are just too insane. Part of the reason why I'm a little about today. Hold on, I need to change this indicator. I should just change it to be on price change, because you want to see what today's ATR is, right? On price change. Okay. You know, could today turn into another one of those days like yesterday? I don't know. I don't feel like it's worth trading now. The other issue is you know what? I need to, I'd have to collect stats about this. One of the problems that I keep running into is like, oh, we could do this, but in order to do this, I would have to have all of the raw data from like the last year, right? So I could write the metric up and I could start running it now and I could start collecting the data now, but I don't actually know if I'm going to get anything from it. So then it will take me like a year for me to find out if there's really anything to it. What I really need is I just need all of the straight raw data saved. So then I've been thinking, well, maybe we make that. What if we made a server where I could literally store all of the tick data for the last, for up to a year. And I'm just make something with tons of storage. I don't know how much one day would be. I don't know how much one day would take. But if I was to store literally every level 2 event raw, every volume event raw, and then, make scripts that could parse it out and everything so that I could run analysis on it. Like that's what I think I have to do with some of these things. Maybe it will happen, right? Stream has been doing pretty good this year. If we continue to go on this year, we might be able to afford to build a machine like that. But I digress. I want to know, what is the average maximum change in cumulative delta? Like, so if you start with the day of 0, what's the highest that the cumulative delta gets and what's the lowest that the cumulative delta gets? And then like, what is the cumulative delta compared to the range? And we could run those stats, and then we could get a chart just like this that says, okay, well, yeah, there are days where, the range was like 22 basis points, but days where the change in cumulative delta is above 50,000 are like exceptionally rare. And so then I could come in and I could make a decision that because the cumulative delta is already down 40,000, I don't want to take a trade. You know what I mean? It's not that bad size wise. I would think that it's not terrible, but I actually do suspect that it's probably like a gig. Believe it or not. So if let's see here. I do have some files that are kind of they're a little bit compressed, so they're not documents. You don't think it would be a gig a day? Here's my cache. Okay, yeah, so this is when I was doing minute resting orders. All of these multiple days. I only did that one. Oh, those ones are not that big, you're right. Oh, that's not right. To open up one that seems like it's big. Yeah, okay. So it's not even giving me all of the stuff though. So like, here's the thing. What I've got here is showing me like I've got a bunch of values and it's calculating the values and it's outputting it to the sheet, right? So this is where I'm saying like I could save this for a year and I could do this, but what if I want to change the algorithm? Then I have to go back. In order to really do it, I would have to save every tick. Does that make sense? Like every event, every on market depth event that comes through, save it to a file. You get what I'm saying now? That is going to be more. How much that is, I don't know. Well, you know what? Maybe I'm being silly about it because it shouldn't be that hard for us to write it. Indicators, speculators, Seth, alpha. Let's call it data pipe. Well, hold on. I just want to have like, maybe this one open in another window so that I can remember. Copy paste a couple of little pieces of code, but I don't want you to see the full code of that one because that's something else I'm working on. Now we're at 24. I think that the decision to not trade this is really going well, guys. So we're going to do on bar update. Oh, not on bar update. On market data. That's what what I wanted. Market data. And on market depth. I don't know. I got like 1 to 2 months and it's about 3 gigabytes. But of all the tick data, like that's why I'm saying like every time that something changes on the level 2, it's going to make a new entry in there. That's like, in many cases, thousands and tens of thousands of lines in your CSV per second. Probably going to be like a gig a day. Well, I could see every piece of volume, but not every level 2 event. If it was volume, then those the numbers that you're giving me there, that actually sounds about right. Yeah. Okay, so what do we got here? E dot. I wonder if I should just convert it to XML or YAML. How should I do it? need to think for a second here. So the reason I'm having CSV does make sense, but like, so there's like the e.ask, right? e.bid, e.volume, e.price, and e.time. Okay, so those are like the key pieces of information that we would want to save for an on-market data event, right? Volume, what the bid and ask was at the time, price and time. Right. But over here on this one, is it going to be different? E. I don't know why I use E, but whatever. E dot. This one I have to do market data type. E dot. Oh, that's not right at all. No, that's not what I want. Hold on a second. No, that's not it either. Come on, where's the one with the lock? There it is, right there. E dot operation. Market depth, event args, E. E dot operation position right there. Then when I come in here, E dot, I don't get operation and position. Maybe it's because this is screwing up my stuff. E dot, there we go. Operation, E position, E price, E dot volume, E dot time, E dot. I think you need market data type. Although you might not want to save all market data type events. E dot. Okay, so like the whole thing is that I've got two kind of events. They're a little bit different, right?
see. That's clever. That's clever. Where does that get created? Go to, where's that to find that? Ninja Trader GUI Super Dom ladder row? Hmm. I don't know where I got that code from now, to be honest. That's kind of interesting. I don't think I wrote that. Now they came back off of those highs. They're kind of threatening like they're going to go down for another thing, but I'm not so sure here at this point. Oil, sure, man. Okay, it wasn't that bad, but oil went from about 94 now to below 93. Yikes. Volume, time, price. I mean, there is an E dot. Oh no, there isn't a bid and ask on this one. Volume, time, price, position, operation, market data type. That's it. So I think what I could do. Oh, and on this one, E dot market data type. Market data event args. Market depth event args. Market data type. Let's look at what the options are. Possible values are ask bid, daily high, daily low, daily volume, last close, opening, open interest, and settlement. Okay, so on that one, I think we only use last, right? I think that it's almost always if type equals last. Yes, okay. Depth, market data type, possible values are ask or bid. Okay, so I think that what I can do here is I can say type, and type can be last, bid, or ask, right? I can do type, and I can do time, volume,
price. And then I will also have bid, ask, and operation, and position. And if it's not relevant, I will just put an NA there, right? Operation, position, price, volume, time, type. You run it on another machine and the algo runs on the VPS. That's interesting. The treasuries didn't fall down through the bottom there yet. They're close though. There we go. Oh, you know what? I don't think I want you to see this code. I have some tricks in here. I'm just gonna move it over here and I'm just gonna do it off screen. So clever. So I think what I'm going to do is I'm going to make a struct here that has this whole thing here. I'm going to let's see here. Date time. Okay. Makes sense. Move this back over here. Long price, public long volume, get sit boom. Man, they're getting down there now again. They're getting to, hey Seth, you should have gone short. We came back just for you and you didn't do it. Okay. Time, volume, price, then bid ask, operation, and position. Okay. Public, market, depth, event, no, what is it called? Market depth. E dot operation. Market depth event args dot operation. Or no, it's just an operation. It's just called an operation. Public operation. Is that allowed? I think that's allowed. Da-da-da-da. Position, operation, and then we just need the bid and ask. Which will come over here. What is bid and ask? Is a double or doubles. Public double. Oh no, it's like lowercase d. Double ask. Public double bid. All right, and then I will have public data point where you pass a market depth event args e, and I'll have one constructor where you pass in. Still going. I'm seeing a lot of activity over there in the 10-year all of a sudden. Looks like that's moving because the 6J is coming back down. Market market data event args. Right, and then I'll have a method called export. It'll be like public string export. That will return a comma separated value of the thing. Might have to change that to like my operation or something like that. Time price volume equals E dot volume volume time price position operation. And then that's it. I think we should also do E dot instrument. E dot instrument is I will make it a string. Like that. Cool. And then I think the export needs to be able to know what type it is, but I think that I can just say that oh, we gotta have type. That's what it is. Let's say public string type. Get set. Type equals E dot market data type to string. Right. And this is going to be pretty similar. Except for that, it's not going to have operation in position. It's going to have okay, we are getting dally here. Oh, it's time for me to go, guys. So the thing is that if I had stayed in that, I could maybe be up $30 at the moment. Worth it? Probably not. For the volatility that there was, at least not worth it. Not worth it for the volatility. So I'm okay with that. I'm going to do this and we're going to run it tomorrow and we'll see how much data it is. I bet you it's going to be gigabytes a day though. And I'll only have it like export everything at the end of the bar or something like that. Might be a lot of memory too. We'll have to see. We'll have to see how it goes, okay? But I got to get going. I'll see you guys tomorrow. Stay profitable, friends, or at least don't lose it all.